What is up, everybody? Welcome to the 2023 Flex Trades Mentorship. This is going to be a mentorship in a course. So we have a premium membership, as you guys know, in the Discord. The Discord is right here, discord.gg/flex. You can join through that and get access to the private mentorship where you get one-on-ones, 24/7 access, etc. It states it if you go here to the upgrade, you see all of this. You can join in the link in the description and find out for yourselves. So what is this gonna be? It's gonna be an educational course where we're gonna be speaking about strategy, risk management, and psychology. These are the three aspects we will be going over. And after this course, you should be able to implement all of this into your own trading and be a successful trader. Well, this course will not make sure that you're gonna be profitable straight from the bat. Of course, it's gonna help and it will drastically improve, but at the end of the day, it all matters of experience, data, and backtesting, data collection, and all that stuff. And we will go over that in every episode. I'm planning on doing about 20 to 25 episodes, and along the way, maybe I'll add some or even leave some. And I will also add the live streams, which we do usually in the Discord for completely free. The course will be partly free, which is gonna be episode 1, 4, 7, 10, 12, 17. So that's gonna be 6 episodes for free. And this introduction, of course, it will be uploaded on YouTube. And the first thing I want to speak about is, what is smart money concepts, right? What is smart money concepts? So first of all, what smart money concepts is essentially, as I've stated here, introduction, what is smart money concept? The real smart money concept is not what they show you on YouTube. And the reason for this is because people forget that only smart money concept and technical factors will not help you. So only drawing lines on your chart, etc., will not help you. And trust me, I've did it before and it did not help me in any way without having my own trading rules, without having my own psychology impact, having data, having backtesting, having high time frame analysis. Because the SMC code, what they do is, first of all, they talk down on retail, which I don't condone because I know there are traders profitable using support resistance, trend line. They are profitable using psychological levels. Even they use fundamental analysis based on news, global macroeconomic and stuff. And everybody is profitable. I know people that are profitable, and it's not hard, right? It all just is due to discipline and experience and just finding your own edge. Because if you're a trader, let's say I'm a smart money concept trader, if I only trade on the 5 minute with no rules and stuff, I will long short, long short, long short all the time until I blow my account. But if I have a trading rule, for example, I go from the higher time frame to the lower time frame. I put my daily bias, meaning I only want to look for longs. I have a set of rules that I need to maintain, and I need to box them off. And we will discuss these rules along in this course, and I will tell you exactly when the correct move is happening and when not. And also the important aspect is that you want to make sure that you're disciplined and sticking to those factors, because if you're not, then you're just breaking your own rules, and this will lead to a long-term non-profitability, because profitability is 90% just based on your rules, on your risk management, and how disciplined you are. You can be the best trader in the world, trust me, if you have no risk management, then that's not good. That's just not going to help you in any way. It's not going to benefit you. Of course, being a good trader is going to benefit you, but as I've said before, you need those risk management and stuff. So yes, risk management overplays strategy, and experience overplays both of them, because experience in the market is very, very important. This is why backtesting for me has been good, but of course live trading and live testing is always better than just backtesting. But when you're trading a strategy, I would say at least 100 to 200 backtesting factors just to get your average win rate, average risk to reward. Because whenever a trader asks you what is your average win rate and you don't know that, then you have not collected enough data, in my opinion, right? And this is also to just see the live markets kind of a bit. Like, let's say, for example, this happened in 2020 when I was backtesting. I will most likely know somewhat what's gonna happen next. And that is the important thing of just collecting data, having price play out in your head before it happens, because you've got so much experience, because you went through so much data. So that is also an important aspect. I've stated that I want to do different episodes, and we're gonna start from easier to harder. So what I'm planning to do is, first of all, we want to start with an introduction, of course, and then market structure, right? I want to explain exactly what market structure is, how you can use market structure to your benefit, and how to avoid getting chopped up in market structure, because some people don't realize that whenever this market structure is happening, for example, this was Friday on NFP, so price action was choppy. So whenever this is happening, you should not be trading. And if you're asking me why, this is just consolidation, accumulation, distribution, whatever you want to call it. This is not distribution, by the way, or it could be, if you look at it, this could be accumulation, manipulation, distribution, but it's not like that really. This is just consolidation in my opinion, and you should not trade this. And this is whole Asia session. If you're an Asian trader, then you have not found any trades during this session. And even if you are a New York trader, after NFP, nothing really did happen, did it? Right? This was NFP, you got lucky, but let's say on Monday it's going to be bank holiday once again, and you won't have any setups. And this does quite happen, right? For example, this, maybe you could have gotten an entry here if you're a low time frame trader, which this course is going to be about. It's going to be mostly on low time frame entries, because smart money is like that, right? Smart money concept is just lower time frame entries. From my experience, you can always enter on the higher time frame, but you're gonna get less entries and probably have a higher win rate if you because you're taking less trades, right? So you always want to keep in mind about market structure. Then I also want to go over how to form your daily bias, because whenever you're going to be going inside a session, you want to make sure that you know what you're looking for. You only look for buys or only looking for sells. There is no reason you should be looking for both. And maybe if, for example, you took buys until the 4-hour supply zone and then look for sells, that is very possible. But of course, you want to have the correct confirmation and all that stuff that is in your trading plan, which we will discuss along the way in this course. And then I want to break down the correct supply and demand zones, which are very important, because people tend to not know what a correct supply zone, because there's a difference between this and this supply zone. And that's what I'm gonna be explaining with different factors and different shows and charts, because in every trading course episode I will show with the charts, with live data, and even going to backtest replay mode, and show you that what I'm speaking about is realistic and real, and it's not fake, because I've done this and I've been doing this for multiple years, and I know what I speak about. Of course, I'm not perfection. I'm not perfect. I have some mistakes. Everybody has mistakes, but I'm here to share my knowledge to make you a better trader faster than I was, because it took me many years, and you could be faster than me. And also, what an important factor is that the most profitable traders are the ones who already got an income, because they don't have the force, like they don't feel forced to make money from trading, because they already got a side hustle or just a main job that also makes money, maybe like 2K a month. That's still good income, right? So yeah, I also want to go to high time frame analysis breakdown, to see your bias and all that stuff, and then how to refine your zones correctly, which is very important, because on the 4-hour, your zone could be like this, right? I'll show a small sneak peek, and then on the 15, my zone could be like something like, that's your 4-hour zone, and then maybe your 15-minute zone would be like this, and that's a difference of about 15 pips, right? 15 pips is a lot for Euro USD. And then I'm gonna be looking at extreme POIs. For example, this is your supply zone, but this is your extreme supply zone, and when to take those, when to not take those, and all that stuff. I will explain it to you very correctly. We will speak about breakout structures, change of characters, and then we will also speak about what the difference between a breakout structure and a change of character is. I will also explain the terms in different names, because I've seen people use different names, and I just don't want you to get caught up in different names, because they're the same stuff, right? And then where to use a breakout structure and change your characters, how to implement it to your trading. Then we're going to be speaking about what is liquidity and how to avoid being liquidity yourself, meaning that how to avoid getting stopped out for no reason. For example, if your stop loss was right here and you got stopped out here and price went into your direction, you're gonna talk about why and how you can avoid that, and then how to include liquidity into your trading, how to target liquidity as a trader, how to target for people's stop losses, and all that stuff. And then we're also going to be speaking about what is a demand supply flip, meaning that whenever a demand fails, it becomes like a supply, like a breaker block. For example, let me show you a quick example. For example, this demand, this didn't fail yet. I need to so this one did get failed. For example, this demand zone, I'll take an extreme real quick. So this demand zone failed, and the reason why this demand zone failed was caused by a supply, and that supply is going to be your valid supply, which I will be discussing in that episode. And then we have what is inducement. Inducement means trapping early buyers / sellers. It's just a trap, right? It's a smart money concept trap, or even retail trap. And by retail, in my terms, retail trading is not trading patterns and all that stuff. Retail trading is people who have no plan, who have no analysis, and just go into the market with no brain. Purely just gambling. A woman in breakup structure is not gonna make yourself a smart money concept trader, and you have to know that. A real trader is who uses higher time frame analysis, top down breakdown to the lower time frame, have your entry model, have your trading plan, have your discipline, know when to trade, know when not to trade, know when to move away from the markets, be disciplined, and all that good stuff, right? And we're gonna speak about all of this in this course. Yes, it's gonna take a little bit of time, but slow and steadily, trading is a business. It's not a rushing process, so you should be calm and slow about it, right? And then we're gonna speak about correlation between financial pairs, meaning like Euro USD, DXY, and then we could also speak about Euro GBP in terms of where you should long or short. Let's say, for example, you're bullish on the Euro USD, but if your Euro GBP is bearish, meaning GBP is stronger, you're better longing GBP instead of the Euro, because the pound is stronger than the Euro, and then the pound will also obviously perform better against the dollar when price go up. Then we're also going to be speaking about how to manage your trades, when to go break even, when to move your stop loss to another certain area, when to go break even, when to take profit, when to take profit too, when to close your trade in a loss, when to cut losses early, when to let your winners run. For example, this could have been your TP, but you could also for example, this could have been your TP, but you could also let your winner run all the way up here. And how to avoid cutting your winners early, we'll also speak about that. We're going to speak about entry models, how to enter the market at the correct zone. Very simple move, 15-minute breakup structure, retest to your demand zone, simple entry model. But we're going to be speaking in depth of all of these with my trading plan aligned, and we're going to mark out every trading rule we have for ourselves. And whenever every rule is marked out, we're going to enter the markets, right? Because you want to mark out your rules. By rules, meaning, let's say, for example, 1 minute chalk flip, retest into your demand zone with a bullish, for our bullish time frame stuff and all that stuff. Bullish momentum, bullish order flow. And then we're gonna be speaking about how to backtest your strategy, risk management, which is very important, because I see a lot of people use the same lot size, which is stupid. Because if you think about it, let's say this is like this is like 6 pip stop loss, and this is like a 14 pip stop loss. You're wasting like 4R, like 4%, by just using the same lot size. So we're also gonna speak about that. We're gonna speak how to pass a prop firm challenge, and we're gonna speak about the reality of a prop firm challenge, because the people, let's be honest, the prop firm is not your friend, it's your enemy. Prop firm is also a business that needs to make money, and the prop firm makes money by you failing. The prop firm does not make money by, it does make money by you making profits, but it makes more money than by you failing, because they don't have to inject any money. And also, people don't realize the prop firm is actually 3 phases, and let me break it down to you, because people do not understand this. Phase 1 is 8%, right? 30 days. Phase 2 is 5% and 60 days. And then phase 3, which is your life. People don't realize, but the reason why you have 30 trading days or 30 minimum days is because a prop firm wants you to be greedy and blow your account within those 30 days before getting to your first payout. And this is what I've done myself. My first funded account, I actually blew my live account without getting my first payout. And then on the second account, my second live, which is a 50K, what I did is I just took a few trades. I made like 2 to 3% and I got my first payout because I wanted to secure the payout. And after the payout, your emotions reset because you're risk free. You can do whatever you want. You can also trade whenever you want. You can withdraw every 2 weeks, which is very, very close. And you can also have no minimum trading dates and all that good stuff. So that's what we're gonna speak about in this course. If you guys have any suggestions, feel free to join the Discord and suggest in the course suggestion. This is where I will be looking at somewhat every day and see if I can add anything to the course, because I'm making the course for you guys, not for myself. So I want you guys to learn from it. So if you guys have any questions, just feel free to ask. So yeah, this is the introduction of the 2023 mentorship course we have on Flex Trades. And yeah, let's get into it.